What an exciting week it has been. We have watched all-time high after all-time high, with Bitcoin briefly topping 93,000 US dollars this morning before settling down to what would have been an all-time high just mere hours prior. We will get into that and more on today's episode of the Bitcoin Bulletin Podcast. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, buenos dias, Morgan, and welcome to episode 188 of the Bitcoin Bulletin Podcast. As I mentioned, Bitcoin is giving credibility to all the calls of 100K before the end of the year, and there are all kinds of reasons to be bullish on Bitcoin besides the fact that we are entering what has been foretold as this year's cycle having induced bull run. But as usual, before we get into all of that and more, let's take that customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 870,195, and Bitcoin is ringing in at a US dollar price of 90,130 US dollars. That is 14,000. That is more than 14,000 US dollars higher than last DCA Wednesday. For those of you lamenting the pullback that we'll get into in a minute, it is just insane to think that we are going to purchase for approximately 14,000 US dollars higher than we have ever purchased in the history of the Bitcoin Bulletin Podcast in just a few minutes. That means that each US dollar that we convert into Bitcoin is going to get us it's going to get us exactly 1,110 sats per dollar. That is 210 Satoshis per dollar fewer than just last DCA Wednesday. That is that occupational hazard of the more expensive Bitcoin gets, the less of it you're going to get for your fiat. That is a trend that has been continuing for the entire history of Bitcoin. It will continue for the remainder of the history of Bitcoin as long as people are willing to trade you that fiat for Satoshis. Obviously, there are times like during the after the euphoric blow off top when Bitcoin has the Bitcoin winter or the Bitcoin bear market of every cycle where that number increases, the number of Satoshis that you'll get per dollar increases as Bitcoin's price retraces. But in general, if you zoom out and you look up and to the right, that's where Bitcoin's going. Obviously, if you look on if you're staring at the price charts daily, there are tremendously large swings. We saw almost a $10,000 daily candle the other day. But when you zoom out, the big picture, one of the things that, the weekly DCA Wednesdays episodes help us do is they help us get that more zoomed out, at least, when we look at it on a weekly perspective instead of a minute by minute perspective. But even so, zooming out even more than just a week over week picture, Bitcoin is up and to the right and going to infinity. And it is certainly well on its way. Bitcoin's current block means that we are 179,805 blocks away from the next halving. I know it's crazy to think about, but that's something that happens every 210,000 blocks. And while it seems like we just had the halving, it's getting closer to where we're going to say it's been a year since the halving. April is coming up fast. And so it'll be time to start looking forward to that next halving. I mean, even before we've even had this cycle's all-time high. Again, TikTok next block, Bitcoin marches on. And even though we're engrossed in the moment, anticipating what's going to happen this cycle, Bitcoin's already gearing up for that future 2028 halving. And at the moment, it looks like that's going to happen approximately March 27th, 2028. So, still almost 4 years away, but before you know it, we're going to be there. Bitcoin's current US dollar value gives it a market capitalization of $1.78 trillion. That is a whopping $280 billion higher than last DCA Wednesday's $1.5 trillion market cap. We're going to get into market cap a little bit more when we get into the news section of the show. But for those of you who value your wealth in shiny yellow rocks, it will currently cost you 34.9 ounces of gold to purchase just one Bitcoin. That is a whopping 6.7 ounces more than it would have cost you just last DCA Wednesday. That's almost half a pound, plebs. You know, I keep saying that it's going to be, there won't even be the end of the year before we start referring to Bitcoin in terms of pounds of gold, not ounces of gold. And we're already talking about pounds of gold because 34.9 ounces of gold is more than 2 pounds of gold to purchase just one Bitcoin. But it's going to get even more extreme. Everything trends to zero in Bitcoin terms. And if you are waiting to get into Bitcoin, you know, they say you get Bitcoin at the price you deserve. And if you're a gold bug, that price is currently 34.9 ounces of gold. And that is only going to get worse the longer you wait before you finally take that orange pill and get off zero. For those of you who value your wealth in pizza, it is getting increasingly impossible to take one whole Bitcoin and eat that Bitcoin in terms of one large pepperoni pizza from Papa John's every day. Currently, one Bitcoin would purchase you 5,040 large pepperoni pizzas from Papa John's. And that is a pizza a day every day for 13.8 years. More than 2 additional years worth of pizza when compared to just last DCA Wednesday. Almost 800, actually more than 800 additional pizzas since just last Wednesday. And as the US dollar value of Bitcoin goes up and to the right, the number of pizzas it will purchase you go up and to the right as well. And that's why I said many times now that if you had one Bitcoin starting today or starting 6 months ago or starting whenever, if you tried to spend an entire Bitcoin by purchasing just one pizza every day, you'd never do it because in 13.8 years, we're talking 3 more halvings between now and then. And, you know, with every halving, the US dollar value of Bitcoin has also gone up, which means that before you get to the next halving or the halving after that, I mean, just this halving, if Bitcoin goes up to 100,000 or 200,000 or a million, you know, that number of pizzas is going to become astronomical. And then we've got multiple halvings coming before you would be able to spend that Bitcoin, even if Bitcoin stayed exactly where the price is right now. So I think we've reached that point where if you have just one Bitcoin, if nothing else, your family, or at least you, can eat one large pepperoni pizza every day, conceivably for the rest of your life. And that is pretty cool. Conceivably, you can carry that on into perpetuity, not just for your life. At some point, we're going to get to the point where Bitcoin is so valuable. We talk about generational wealth. This would be like generational pizzatude, generational pizza wealth, where you could conceivably set your family up to eat one large pizza every day for forever for just one Bitcoin. And I know pizza isn't the healthiest thing out there. A lot of Bitcoiners are on the carnivore diet. The only reason we're talking about pizza is because that very first Bitcoin Pizza Day back in May of 2010, when Laszlo Hania purchased 2 Papa John's pizzas for a whopping 10,000 Bitcoin. So I've been using that running Bitcoin pizza metric for the entire history of this podcast because of that. But it also really shows you the increase in Bitcoin's purchasing power, despite the fact that we've got inflation that is just still soaring. And of course, we're going to get into that a little bit too in the news segment. But again, once again, as usual, I'm getting a little sidetracked. That metric that you know has been my favorite for most of the podcast history, Bitcoin's 24-hour average transaction rate, is zooming along, averaging currently 6.59 transactions per second on chain. And that is up from last week's 5.65 transactions per second. Although still down from the record smashing 8 or 9 transactions per second we were seeing earlier with all that spam on chain. And so I think that, well, of course, we are seeing that transaction rate increase, and that corresponds with the price increase. So that metric still holds. But I think we're starting to see a lot of that spam either, well, first of all, it was all a scam to begin with. And like all scams, eventually they go away. But also maybe we're starting to see some of those scams get priced out a little bit or pushed out a little bit by the excitement around Bitcoin. People are less excited about Bitcoin alternatives, finding that next Bitcoin, et cetera, when Bitcoin's pumping, and concentrating more on just stacking those sats. That's just my humble opinion, my personal opinion, my personal insight on why I think the transaction rate is down from those record high hash rates of 8 to 9 transactions per second, while still significantly higher than they used to be in previous cycles when 4 transactions per second would have been zooming. If you go back just a couple of years ago and listen to podcasts, I say that anytime we were above 3.14 transactions per second, that pi metric, 3.14 or pi, that Bitcoin's price was usually pumping. And so here we are at 6.95 transactions per second when Bitcoin's price is pumping. And that is certainly a lot higher than that 3.14 or 4 transaction per second threshold that we used to see before the ordinals and the inscriptions and the BRC20 token shenanigans. Speaking of on-chain activity, that mempools are absolutely chock full of pending transactions. We had seen the mempools trending towards clearing out the last several DCA Wednesdays. They never got clear, but they were heading in that direction. And currently, Clark Moody's dashboard mempool is showing 185,799 pending transactions, up more than 78,000 transactions since last DCA Wednesday. So about 78%, 75% higher than just last DCA Wednesday. So obviously that reflects that increased on-chain activity that we were talking about in the on-chain transactions average per second. Plebs, if my voice is going a little bit, right before I went to the studio, I walked into a room where someone had one of those, not incense burners, but they were, the candle wax warmers. And for whatever reason, it did not react well to me. And I'm feeling like I'm starting to lose my voice here. So I'm not sick. I was feeling really good when I was setting up the show notes, but I'm looking at the monitor on my soundboard right now, and I can see that the volume of my voice has dropped, despite the fact I feel like I'm pushing. I'm trying to force my voice to be louder. I've scooted an inch or two closer to the microphone than when I first started the podcast. So if my voice is trailing out, I apologize. Try and clear my throat here and see if I can push through this. Where was I? Back to the mempools. Mempool.space has always had a slightly larger mempool than Clark Moody. Their mempool is still showing a pretty healthy increase. Last week, they were showing 180,315 transactions. So about where Clark Moody's mempool is this week. But today, they're showing an increase of more than 87,000 transactions in their mempool. Currently, they're showing 67,619 transactions pending. So still not as high as we've seen when there was, record transaction, when the mempools were really just bloated. Again, getting back to that spam that I was just referencing, but solidly healthy on-chain activity, hopefully most of which is actually valid on-chain Bitcoin transactions. Along those lines, if you need to send an on-chain transaction, it's going to cost you a little bit more. Clark Moody's fee estimator is saying a high priority transaction needs a fee of 21 sats per VByte, up from just 4 sats per VByte last week, to guarantee that you're in the next block or two. However, they are showing that if you have up to a day or maybe a week to wait, that you can still maybe include a transaction as low as 2 sats per VByte. Mempool.space is telling a similar story. They're saying that a high priority transaction needs a fee of 20 sats per VByte. That works out at current US dollar prices to be $2.53. So certainly a lot more expensive than last week when they were recommending just 3 sats per VByte, although still pretty darn cheap considering you can send an uncensorable transaction to anywhere in the world pretty much instantly, confirmed within 10 minutes or so, for just $2.53. Good luck sending a remittance to El Salvador or Venezuela for anywhere near $2.53. But I have been watching this closely. Yesterday, for example, I saw on-chain transaction fees go up into about the same range. And then later in the evening, I saw them go down to where 3 and 4 sat per VByte transactions were clearing. So take that with a grain of salt. If you don't need to make an on-chain transaction right now, or if you have a little while to wait, then do your own research. Depending on what time you're listening to this podcast, check mempool.space, check Clark Moody's dashboard, or wherever you prefer to get your data for whatever the current recommended on-chain transaction fee is, and it'll give you that range. And then maybe you can lowball it a little bit if you have time to wait. Certainly yesterday, 4 sat per VByte transactions were going through, and mempool.space is showing that that a no priority transaction can still have a 4 sat for VByte transaction, although they're showing that a low priority transaction should at least have a 17 sat per VByte fee at this point in time. So again, that's one of those things. Not only do your own research, but make sure you have the most up-to-date data possible. And also make sure that your wallet will allow you to use replace by fee or child pays for parent, or that maybe you know how to use the mempool.space's transaction accelerator. So if you do send a transaction that maybe you're willing to wait, but all of a sudden it's taking longer, or the fees continue to go up and you're just not willing to wait anymore, that you know that there are ways and you're familiar with those ways to get that transaction boosted or accelerated so it will be confirmed faster. Speaking of on-chain, we are now 717 blocks away from the next Bitcoin mining difficulty adjustment. That looks like that's going to be about 5 days away from now on November 18th. As you are probably familiar, the difficulty it takes to find the next Bitcoin block is adjusted every 2016 blocks, which usually works out to about once every 2 weeks, with the goal of having blocks come in at an average time of 1 block every 10 minutes. Currently, it's looking like it's going to be slightly easier to mine the next block, well, at least the block 718 blocks from now. Depending where you get your data, that's going to be a decrease of a small decrease of just 0.1% to as much as 1.66%. And that is a big change from last DCA Wednesday. And it was actually looking like we were going to get a 0.3 to 0.56% difficulty increase. Currently, that is because blocks are averaging 10 minutes and 1 second between blocks, whereas last DCA Wednesday, they were coming in at 10 minutes on average. Again, that is random chance, basically. So, anything can happen in the next 700 blocks or so. And quite frankly, all the network hash rate estimates are showing that the network hash rate has been increasing. Last DCA Wednesday, we were looking at 665.7 exahashes securing the network, and currently the estimate is 672.4 exahashes. So we'd been seeing about a 7 exahash increase every week, and this is a 6.7 exahash increase, so that certainly falls in line. So there are a number of reasons why blocks can come in slower, not just a decrease in network hash power. So while it doesn't look like we have a decrease in network hash power, the only time we'll tell, I guess we'll find out in about 5 days. That is one of the genius things about the Bitcoin core protocol, is that, instead of making a snap judgment and saying, blocks are coming in too slow, we need to adjust the difficulty on the fly, it takes that much larger average of 2016 blocks and uses that to determine whether we should have a difficulty adjustment. Although, just like Bitcoin price, man, my voice is getting gravelly. I was just looking at the volume dropped completely off right before I said, although looking at the Bitcoin price and looking at the Bitcoin hash rate, they both trend up and to the right. If you just zoom out, while network hash rate has ebbed and flowed, corresponding oftentimes with, the cycles. When Bitcoin's booming, people add more network hash power. They bring out old miners that might not have been efficient at previous Bitcoin US dollar values. And then when we have that blow off top, mining becomes a little bit less profitable again, and some of those older miners are turned off, etc. So, the hash rate ebbs and flows just like the Bitcoin price. But in general, if you zoom out far enough, it too is averaging up and to the right. 672.4 exahashes that's almost a mind-boggling amount of computing power. Clearly, obviously the largest computing network in the world, and getting stronger every day. Before I continue, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 app, such as Fountain. Podcasting 2.0 allows you to support this podcast through the value for value method by either streaming sats on a minute per minute basis, where you basically set it and forget it. You determine how much value you're receiving by listening to me and this podcast, whether you think that's 1 Satoshi per minute or 5 or 10 or 20 Satoshis per minute. You can set that and just automatically stream this podcast sats as you're listening. Or the other method, which has been the most popular and quite frankly my favorite, that's the boost method. And a boost is basically a shout out where you send a message to the podcast. Let me know what you think about the podcast. Just say hi, or say whatever you want, really. And because it's a Lightning transaction, you're sending some Satoshis along with that shout out with that boost. And of course, we do read those boosts on the very next episode of the Bitcoin Bulletin Podcast. We don't have any boosts to read today, but thank you to those of you who have been supporting the podcast via Podcasting 2.0. And speaking of our listeners, our geographic distribution of listeners has remained ossified. The top 10 countries are as follows. More than half of you, number one, more than half of you are listening from the United States of America. So thank you to my fellow Americans. And hopefully great things are in store for our future. Number two remains Argentina. So muchas gracias, amigos, in Argentina. There's certainly a lot of exciting things happening in Argentina, and I think we have a fairly good chance that our incoming government is going to take a page from the playbook of your current president. They certainly seem to be referencing Javier Milei quite a bit in their plans to maybe downsize the federal government here in the United States and maybe get some of that deficit spending under control, which would, of course, help preserve the value of the U.S. dollar and prevent some of that horrific inflation that we've had to suffer through in the last couple of years. Although, again, nowhere near as bad as the inflation in other countries, especially the inflation you've seen in Argentina, probably multiple times in your lifetime. So, again, muchas gracias. Thank you to all of you listening from Argentina. Number three remains Germany. So, guten Abend, mein Freund in Deutschland. Danke schön. Danke für alles. Number four remains Canada. So hello to those of you listening in the frozen white north. It's gorgeous here in Florida, but we do have a cold front moving through, which means it's starting to get, especially when it's breezy, a little chilly here for walking around in shorts, a tank top, and flip-flops. But it's got to be a lot colder than that up in Canada if you're listening from Canada. So bundle up. Turn on that Antminer to help warm up your house and enjoy the winter. But most importantly, thank you for listening to this podcast. Number five remains Luxembourg. So Dankeschön, mein friends in Luxembourg, or Morgen to those of you who speak Luxembourgish. Number six remains the United Kingdom. So thank you to those of you listening across the pond. We share a very storied history between these two countries, albeit coming up on 250 years ago that our two countries went their separate ways. And there's some interesting things coming up. Just since the election, incoming President Donald Trump has proposed this huge World's Fair. You know, they used to have the World's Fairs where countries that have pavilions and they would get together and showcase, you know, the latest and greatest things that were going on in their country or their culture. And we haven't had that in a long time. But it looks like Donald Trump is planning on bringing back the World's Fairs and starting in 2026 to showcase the 250th anniversary of the Declaration of Independence and the foundation of this country. Getting off on another tangent, as I often tend to do, but what I'm trying to say is thank you to our brothers, our cousins across the pond in the United Kingdom, who are the sixth most popular country for listenership. Number seven remains Singapore, so apa kabar to those of you listening in Singapore. Number eight remains Spain, so hola, muchas gracias amigos in España. Number nine remains Colombia. So again, hola, muchas gracias, amigos in Colombia. And rounding out the top 10, as has been the case for more than a month now, is Mexico. So again, hola, muchas gracias, amigos in Mexico. All right, on to the news. As has been the case for the vast majority of this podcast, the price is front and center in the news. And it is certainly what people are focused on today. And boy, howdy so. Ironically, I checked the price of Bitcoin this morning, and I think it was about 87,400. And then I got busy. I didn't look at the price of Bitcoin again until it was time to go pick up a family member for an appointment at like 2:00 this afternoon. And when I did, I looked and I said, oh, wow, Bitcoin's at $90,000. Really cool. And then I looked at a little bit more deeply and I saw that Bitcoin had gone up to higher than $93,000. It had just had this huge pump this morning. I completely missed it. And people were lamenting the crash. Which kind of amusing because, again, zooming out, in this case, zooming out by accident, I didn't notice the so-called crash. Either way, today is going to be the most expensive in US dollar terms Satoshis that we have ever stacked. And I'm reminded of a tweet that Adam Meister, you know, the OG, the Bitcoin Meister, he put out yesterday, and it kind of puts all this in perspective. And it was relevant yesterday, and it's even more relevant today. Yesterday, Adam Meister tweeted, yesterday was one of the legendary Bitcoin days that make up for the many down days in price. Most come during the part of the 4-year cycle we're entering. Remember it in order to strengthen your hands for the panic days in 2026. 9K pump days were fantasy only 8 years ago. Hashtag BTC $800. So as usual, Adam brings those strong hands, that level thinking. If you're not following Adam Meister, he's at TechVault on Twitter. He used to do a daily podcast live on YouTube called The One Bitcoin Show. And he called it The One Bitcoin Show because basically he was saying you need to stack at least one Bitcoin. I guess it's been over a year now since he stopped doing a daily show. He still does shows from time to time. I think he did one just yesterday. So he does them from time to time, but not daily. And he certainly, I certainly miss his shows because if nothing else, he always offered that level-headed perspective that said, hey, stay focused, keep those strong hands. One of his sayings is, Bitcoin always returns to its all-time high. And we're certainly seeing that in play right now in force. As some of his other quotes, are like long-term thinking that goes in hand with the whole Bitcoin always returns to its all-time high. He came out with the 210,000 block theory, which says that if you take the price of Bitcoin and you go back in time 210,000 blocks, it was always worth less than it is at the current block that you're going back from. And by extension, if you go forward in time from any point in time, 210,000 blocks, Bitcoin will always be worth more 210,000 blocks from now than it is currently. So thank you to Adam, who also had a birthday just the other day. So happy birthday to a truly unique beast. All right, back to the Bitcoin price action. I want to point out this quote unquote crash from $93 to $90,000. Look, people take profits. Whenever the price of anything goes way up, people start thinking about what could they do with that money. It's just human nature. And for the professional traders out there, it's the whole point. I mean, it's exactly what they do. It's literally the only reason some people have purchased Bitcoin in the first place is to buy it or trade it, just like any other asset. There are day traders out there buying and selling just to make a quick buck. And if you're one of those people, it was the no-brainer to sell at 90 for them, by their logic. Obviously, by our logic, we want to stack as many sats as possible. Again, I'm going to get into more of that in a little bit, but I just want to say that it's natural that people are going to take profits from time to time. Along those lines, and probably because of that, every cycle, and I've said this years ago, I said this before we even had the halving, when I said what to look forward to after the halving, what was going to happen after the halving, once we finally start eclipsing the previous all-time highs, that in every other cycle, there have been 5 to 7 major pullbacks that occurred after the face melting bull run already kicked off. And this isn't even one of those at this point. We're talking 30% retracements, and we're talking about 5 to 7 of them on a normal halving cycle. Of course, history doesn't necessarily repeat, but with Bitcoin, especially with Bitcoin being mathematically predetermined, it does make sense that these cycles will rhyme by default. And that, in general, it would take a black swan or a golden swan to deviate from this predetermined rhythm. So don't be shocked. Don't be scared. You ain't seen nothing yet. If Bitcoin rhymes, the real action isn't even going to begin until 2025. And I don't mean we're not going to continue to see new all-time highs, maybe 100,000 or more by the end of the year, as many are predicting. I'm saying even if that's the case, even if we end the year over 100,000, Bitcoin is only going to go even higher. That explosive euphoria phase where your Uber driver is telling you about their new Bitcoin stack and all the media's talking about Bitcoin nonstop and your mom's calling to ask about Bitcoin. That part of the cycle, the euphoria part of the cycle, literally only lasts for weeks. And it traditionally doesn't occur for more than a year after the halving date. So we would be talking like next spring, April, May, June, next summer, before we would really, really see the euphoria phase kick into gear. And whatever this cycle's all-time high ultimately is, before we then officially have that big retracement, and Bitcoin gets back into that price discovery mode, and we end up with a bear market, or at least a crab market, unless we end up with the super cycle. And again, nobody knows, but I would have to guess, and it would be just a guess, nobody has a crystal ball, that we have 1 or 2 more halving related cycles in us before the halving becomes so irrelevant that it doesn't have an effect on Bitcoin's price anymore, before we no longer have a halving price cycle. One thing I do try to remind myself, though, when I do feel FOMO or when I do feel FUD, is that all that matters is the size of my stack. And I started to talk about this a little bit earlier, but when Bitcoin hits $1 million or even more one day, I'm going to be asking myself, do I have enough Bitcoin? Will you really care at 1 million or 10 million or $100 million of Bitcoin if you bought at 88,000 or at 90,000 or at 39,000 or 150,000? When we hit hyper Bitcoinization, are you going to be nitpicky about whether you bought $5,000 or $10,000 more expensive than you could have? Or are you going to care about how much Bitcoin you have? I posit, no, you're not going to care what you purchased at. All you're going to care about is, did you stack enough sats? And I've seen this in previous cycles. Every time Bitcoin sets a new all-time high, I start worrying, did I stack hard enough? And even for those of us stacking as hard as we can, we're stacking here every Wednesday. I'm buying the dips besides just what I do for the podcast and putting away as many Satoshis as I can. But it always feels like we haven't done enough. Even Michael Saylor feels this way. Every time you think Michael Saylor's the Giga Chad and he's stacked more Bitcoin than anybody could possibly want, he announces he's going to stack more. He just stacked $2 billion worth of Bitcoin on the way to $42 billion more worth of Bitcoin in the next several months. So it's just human nature. So that is why we DCA. It's not just because it has worked out for us, as the adage goes, time in the markets beats timing the markets every time it's tried, but because every previous cycle, I've always felt like I haven't stacked enough. Even after the ETFs were approved and Bitcoin rocketed to $70,000, I thought, oh no, I might not ever hit my goal. And then of course we got the second chance. Bitcoin went back down in price. But again, as Bitcoin starts pumping up, that feeling is creeping up. I'm looking at my stack. I'm looking at it in terms of what is generational wealth for my family going to be. Bitcoin I can leave that my family might never have to worry about their security ever again. How many Satoshis would that take? Even if it's not that much, do I have enough Satoshis that maybe I can retire comfortably one day? Or even do I just have enough Satoshis that I could handle an emergency if an emergency creeps up? And that number, fortunately, goes down as the price goes up and those Satoshis have more purchasing power. But nonetheless, you start putting that into perspective, particularly on the price run. Nobody ever seems to think that way when the price is down, when Bitcoin's truly on sale. In fact, that's when the people start saying stupid things like, I'm just going to wait till Bitcoin's back in the $30,000 range before I stack, looking the $58,000 Bitcoin and gift horse in the mouth, waiting for it to go lower when the 58K gang was having their fun and was doing their 58K memes. Imagine when Bitcoin is 58K, thinking I'm going to wait till it hits 30, or I'm going to wait till it hits 25 before I stack, and then turning around and looking at where we are today when Bitcoin is $90,000, and thinking, was that a good decision? Are you really happy with the number of sats you have or could have had? And contrasting that with us, where we're buying every Wednesday, regardless of the price, what the price is. And even though the price of Bitcoin is going up and to the right, so is the size of our stack. And we're doing it basically on autopilot. Even though I'm opening my phone, I'm opening my Cash App, I'm manually making the purchase. You could literally do it on autopilot. Plenty of apps, including Cash App, will let you set it and forget it and DCA automatically. I just like to do it in real time while I'm doing the podcast. Either way, that is certainly something to think about when people are starting to think that Bitcoin is expensive at prices like $90,000 a Bitcoin. Again, it will only be with hindsight that people realize just how early we still are. $90,000 feels expensive now, but when Bitcoin's $10 million a coin, or there are those that have predicted $1 billion per Bitcoin, right now it's hard to think you're early when you look at the OGs that got in for 4 cents a Bitcoin, or for $5 a Bitcoin, or $1,000 a Bitcoin, or even just 25,000 a Bitcoin. You'd feel like you're not early, but I posit that we are. We're very early. We're not as early as we were, but the United States still doesn't have a Bitcoin strategic reserve. El Salvador is pretty much the only country out there with Bitcoin as legal tender. Very few companies are trying to emulate the Michael Saylor strategy. We have 1 or 2 pension funds out there exploring Bitcoin, but in general, banks don't allow you to hold Bitcoin as your savings account or your checking account. Countries are not using it to settle international trade, except for, the odd example here or there. Before these things happen, you're still early. But again, it's one of those things that you can really only see when you're looking in the mirror. So next cycle in 2028, who knows how many of those things will have changed? 10 years from now, certainly most, if not all of those things will have changed. And then we look back people listening to this podcast are going to be laughing at me talking about trying to convince people that we're still early. They're going to say, of course you're early, you idiots. You were buying for 90,000 US dollars. The US dollar still freaking existed, for crying out loud, and people were willing to trade you slips of paper for Satoshis. Wicked, a familiar Bitcoin influencer, especially if you listen to Cafe Bitcoin Spaces, or what used to be the Cafe Bitcoin Spaces and podcast before the upheaval at Swan and all the things that happened, where they've reformatted their spaces several times because of a couple of scandals. But now apparently they're pretty much defunct, or at least regrouping. Either way, Wicked should be familiar with you, to you. He's at W_SW or _Bitcoin on Twitter. Posted exactly my sentiments, where he tweeted, I guess 2 days ago now, well, shit, I probably ain't gonna hit my stacking goal now. And then a cry smiley face, #Bitcoin. I'm sure some of that is tongue in cheek, but it definitely emphasizes or puts the punctuation on exactly what I was saying. And it's something that all of us think about, even people who are in the Bitcoin business or Bitcoin OGs. One last note on Bitcoin price. I want to reflect on a post that is just 5 days old. It's 5 days old, and normally I wouldn't want to talk about a tweet that was 5 days old, but because this is just how it illustrates just how fast things change in Bitcoin, but also because I wanted to talk about this tweet when they posted it, because it was an example of people forgetting the past. And I was going to point out just how wrong they were, or why I thought they were wrong. And that's Whale Panda. And I follow Whale Panda because they usually put out some good intel. But on Friday, Whale Panda tweeted, I know it's weird to say after a week like this, but BTC is acting weird and underperforming. When it broke all-time high in the past, the moves are always aggressive upwards. Now it barely moves up. The higher the market cap, the more is needed, but inflows are massive, so who is unloading? And they made several posts where they were thinking about maybe the price of Bitcoin is being suppressed. Obviously, this is irrelevant now because Bitcoin has just boomed in price since then. But as I've said ad nauseum on previous podcasts and in this podcast, we are still early. If this cycle rhymed, we should just now be approaching the time when we would have expected to eclipse the previous all-time high. In fact, unlike what Whale Panda thinks, we are ahead of the ballgame, and we were ahead of the ballgame price-wise when Whale Panda said so. In general, we should not have expected to eclipse the previous all-time high, $69,000, until about now, October to November. Maybe Thanksgiving, maybe as late as Christmas, if we had rhymed with the normal cycle. This isn't a normal cycle. We had the Bitcoin ETFs. We had the first presidential election in the United States history where the candidates were talking about Bitcoin. We now have a president-elect who's promised to have a U.S. Bitcoin strategic reserve, who's promised to appoint prominent Bitcoin maximalists to important positions in the government. So those things have certainly changed. Those things certainly count as a golden swan event that you would expect to mean that this time is different than last time. But even so, we are outperforming significantly so a normal cycle. So it's weird to see Whale Panda say something like that. Also, as I've said, the real face-melting parabolic run shouldn't even happen until sometime in 2025. I fully stand by that take. Even with the exciting price action we've already seen, I firmly believe this is just the warm-up. This is the equivalent of that long, slow, steady climb that we should start seeing in the fall around Thanksgiving, where we overtake the previous all-time high, and then we set a few new all-time highs, maybe have some retracements like we're seeing this afternoon, but steadily move up into the right, even more so, more aggressively so, until eventually we get the euphoria phase. And the euphoria phase is just nuts. That's when you're going to see those God candles. That's when you're going to see Bitcoin get so expensive that you don't even believe what it's doing. And of course, when that does happen, you know it's only a matter of time. Usually that final blow off all-time high, the blow off top high will only last for mere hours, a day or so at max. And then, you know, we retrace and it all begins again, as the song goes. Quanto Ronto on Twitter at Quanto Ronto was looking at the same facts, but came to a slightly different take than Whale Panda. Even though he was looking at the same facts at just about the same time, because he posted this on Monday. November 8th. So about the same time frame as when Whale Panda was lamenting that we hadn't seen the bull run that we should have, that things should be more exciting. Quanto Ronto tweeted 77K Bitcoin and nobody even knows or cares. This is bullish AF. They were feeling the vibe that I'm feeling, that we're ahead of the ball game. On November 8th, we were at $77,000, which was significantly higher than the previous cycle's all-time high of $69,000 before the ETFs got approved and we set an all-time high just before the halving date. But what I consider that portion of the cycle, the euphoria having induced euphoria phase of the cycle, that high was 69,000-ish, depending where you get your data. So we were above that, and people aren't really talking about it. The people are talking about other things. Sure, Bitcoin's more in the news more often than it used to be, but the cab driver isn't trying to sell you Bitcoin or talk about his stack. You're probably not getting as many of those DMs from the cute Asian girls saying, how's your trading going? The things that would really indicate that the normies are just piling in. The Google search results, where Bitcoin becomes the trending number one Google search result for days on end. Those things haven't happened yet. And the fact that Bitcoin was at 77,000 and that those things haven't happened yet was tremendously bullish. So I fully co-sign that tweet. I wholeheartedly endorse what they're saying. And just the day before that, on Thursday, November 7th, Lena Sichet tweeted something almost exactly the same, only she tweeted it with her littlest toddler cartoon in a way that only Lena can, with the tweet saying, people are so hard to impress these days. And it's a 6-frame comic where it shows, Bitcoin and the littlest toddler partying. And someone says, what? And Bitcoin says, I'm at the all-time high. And then the next frame, the person says, yeah, but only like 1,000 higher than the last all-time high. And then the next frame, Bitcoin says, but everyone who bought is at a profit. And the person walks away saying, call me when you're at 100K or something. And that seems to be the general consensus. Even maximalists are waiting for 100K before they really consider this all-time high an all-time high. And even when we eclipsed 69,000 after the spot Bitcoin ETF, everyone was saying, yeah, but 73 really isn't the all-time high because you have to convert, you have to take into account inflation. We need to be a lot higher because money's just worth less. Something nobody had ever said before at any previous Bitcoin all-time high, or something that nobody takes into account when they're talking about gold or the S&P 500 or the Dow. Nobody says, oh yeah, but taking into account for inflation, it's not a new all-time high. It's a new all-time high in terms of the US dollar, which is specifically the metric that they're referencing. Naturally, the all-time high is going to be not taking into inflation, because inflation is always going to be there. Inflation is the whole basis of what a fiat currency was created for in the first place. Of course, the US dollar is trending to zero. So of course, when Bitcoin hits a new all-time high in US dollar terms, it isn't as impressive as it could have been had you taken inflation into account. But that's what Bitcoin is taking into account, is it makes the US dollar irrelevant and keeps pushing to ever higher all-time highs. So for those of you who remain unimpressed, in this recent run-up, Bitcoin officially surpassed the market cap of silver and briefly even eclipsed the market cap of Saudi Aramco, which would have made it the 7th most valuable asset in the world at 1.802 trillion, just behind Google, Alphabet, which is 2.2 trillion, in the number 6 position. Since then, Bitcoin obviously retraced. We're just under Saudi Aramco, although barely. Saudi Aramco's market cap is 1.797 trillion, and Bitcoin's current market cap is 1.78 trillion. So briefly surpassed Saudi Aramco, a mantle it will take as Bitcoin eats the world and eventually even overtakes gold's market cap. All right. On a slightly separate, adjacent, but related note, it really does feel like the winds are changing. Something has changed in the world, in the country, and it's palpable. Just a few days ago, we were fretting about a big choice we had to make about the direction of the United States. Some people were saying that this was going to be the last election ever if the results didn't go their way, that it was potentially the end of democracy, blah, blah, blah. It got really heated and people were at each other's throats. Family and friends were unfriending people, refusing to speak to people that weren't supporting the candidate of their choice. That decision has been made. It is over. And in the meantime, from a governmental standpoint, absolutely nothing has changed. Nothing will change until January 20th, which is Inauguration Day, when the new presidents are sworn in and when they get to be in charge of the executive branch of government. But despite the social media meltdowns we saw in the day or two after the election, a lot of that has faded. Now, everywhere I look, everyone for the most part seems radically optimistic. Maybe so many of the people that were having those meltdowns have just gone into hiding, or they've stopped talking, or they're irrelevant now. The media is not highlighting them anymore because the election's over and they're on to the next thing that if it bleeds, it reads. There's no money to be made in talking about old news. But I am old enough to have lived through the 1970s and 1980s. And while I don't have a crystal clear recollection of the earlier part of that, especially the early 70s, I distinctly remember the 1980s. That was a good time in my life. It was a good time in the country. And it really feels a lot like 1980 to me. 1980 was a major turning point for the United States and indeed for the world. And in a lot of ways, in 1979, a lot of things were the same. There was war in the Middle East. People were at their throats there. Oil was soaring. Inflation was soaring. The families were having a hard time struggling. There was just a lot of contention, and they coined the misery index, and we had stagflation, which was a new experience for the country, and just there were a lot of things that I was starting to say, this really, really feels like the Jimmy Carter presidency to me right now. We have somebody that just doesn't seem to be in control, and the world seems to be spiraling out of control, and things are getting expensive, and people are losing their jobs. And it was just not an optimistic time. And then we had the 1980 election, and we had what was termed Morning in America. I'm getting those same vibes. And maybe I'm being hopeful or overly optimistic, and only time will tell, but it just feels like that. The air seems to smell a little fresher. It seems like there's a little more joy in the world than there was just really mere hours ago. Along those lines, future president, past president, and President-elect Donald Trump has been starting to indicate that he's going to make good on some of his campaign promises by announcing who his cabinet members are going to be. Obviously, he can't do the things yet like pardon Ross Ulbricht because he's not the president until January 20th. So we'll have to wait and see if he really does make good on those promises. But one of the things he did was today he announced that he's going to appoint Florida Congressman Matt Gaetz as the next Attorney General of the United States. And this is important as a Bitcoiner for multiple reasons. First of all, Salvadoran Pride tweeted out on Twitter, "Congratulations to one of the founding members of the El Salvador caucus, at Matt Gaetz, being nominated to be the next Attorney General of the United States." That's right. Matt Gaetz was one of the founding members of the congressional caucus to support El Salvador and President Bukele. And of course, he traveled to El Salvador for President Bukele's inauguration. The headline on July 11th, 2024 was that Gaetz launches bipartisan congressional El Salvador caucus. But more important, as a Bitcoiner, back in June of 2024, Matt Gaetz introduced a bill to force the Internal Revenue Service to recognize Bitcoin and to accept income tax payments in Bitcoin. The Daily Wire published a release from Matt Gaetz saying, Representative Matt Gaetz is introducing a bill that would allow the federal income tax to be paid with Bitcoin. The Daily Wire can exclusively reveal this legislation, if enacted, would amend the Internal Revenue Code of 1986 with language ordering the Treasury Secretary to develop a plan for accepting the popular decentralized digital currency. By enabling taxpayers to use Bitcoin for federal payments, we can promote innovation and increase efficiency and offer more flexibility to American citizens, Gaetz told the Daily Wire. He continued, "This is a bold step toward a future where digital currencies play a vital role in our financial system, ensuring that the U.S. remains at the forefront of technological advancement." Gaetz recently traveled to El Salvador to attend the second inauguration of President Nayib Bukele. In 2021, Bukele led his country to become the first nation to adopt Bitcoin as legal tender. So it doesn't take a rocket scientist to see that Donald Trump has begun appointing Bitcoin maximalists to important positions in the US government, something that was completely unfathomable just mere months ago. And that is really exciting, regardless of whether you like Matt Gaetz as a person, regardless of whether you're a Republican or a Democrat, what you think about the direction of the country and everything other than Bitcoin. It is unquestionable that we are building a future US government full of Bitcoiners. And to me, as a Bitcoin maximalist, that is exciting. Some things, however, never change. Today, the CPI numbers for October were released, and they came in exactly as expected. Of course, remember, I've always said that there are three types of lies: damn lies, and statistics, to quote Mark Twain. And of course, CPI numbers, like all statistics, are highly dubious. They're always manipulated for the government's purposes. But even taking them at their word, inflation is still elevated. Even assuming that their metric is correct, that the CPI numbers are not highly massaged and manipulated, which of course they are, even then they're showing that inflation is above their quote unquote 2% target, which I remind you is pure unadulterated theft in the first place. Remember, the definition of insanity is doing the same thing over and over again and expecting results. And as far as inflation is concerned, the government is continuing to print money out of thin air, printing billions of dollars a day, hundreds of billions in many cases recently, and expecting to debase the US dollar and expecting that to result in a decrease in inflation. That's just insanity. But again, it's exactly what you expect from a government whose entire foundation, at least for the last more than 100 years now, has been based on the ability to print money out of thin air that you have to trade hours of your life to earn. I want to remind you two things. Inflation is caused by the reckless expansion of the money supply by the printing of dollars out of thin air. It is simple supply and demand. More money chasing after the same goods causes those goods to cost more of that money. But it isn't that the goods are increasing in their fundamental value. It is that fiat money, by means of dilution, is worth less. The second thing is that inflation is on purpose, and that its purpose is to steal from you. It is an invisible tax. It is a shady, hidden tax, and inflation is theft. Glock on Twitter tweeted about this with the classic goofs meme. Of course, he tweeted, "Inflation is theft, study Bitcoin." But then it's that meme with the goose, and the goose is saying, where does the 2% inflation target come from? And then the goose is chasing the person who's running away in the down jacket. And it says, "Why are you stealing 2% every year, mother effer?" Censoring myself. That's not what he typed, but it's what I read. And that's the point. Speaking of business as usual for the government, one of the things we saw leading up to the election was all of the polls basically saying the election was going to be extremely close, and that even if Donald Trump won, he was going to lose the popular vote, and he was expected to lose a fair share of the swing states, of which he ended up winning all of them. One thing that was telling the story, a different story all along, that was showing that Donald Trump was not only going to win, but he was going to win all 7 of those swing states, was the prediction market, the betting market, Polymarket giving, almost a 68% chance of Donald Trump winning, except for when that one erroneous poll came out from the day before the election from the Des Moines Register that turned out to be just wildly wrong. And then the betting odds seemed to narrow a little bit. But of course, the betting odds and the poll odds in general always narrow as the election is getting closer, because they're quite frankly not willing to take the risk of losing money, because the decision's going to be made in hours. And it's just, if you haven't made the bet already, you're not going to get as good odds. But this just in, a couple hours ago, FBI seizes Polymarket CEO's phone electronics, according to the New York Post. So that's right. The election's over. And what is the government doing? Weaponizing the justice system against a perceived enemy. Blaming Polymarket for their loss, because remember, as I've said, polls do not reflect public opinion. Polls are propaganda designed to manipulate public opinion. It is human nature to want to be on the winning team. It is human nature to want to like the popular guy. And that is why we have always shown polls going into the elections in the last several elections that have shown the Democrat, in this case, winning wildly. Like, for example, going into election night, everyone was popping champagne corks, and the news had already printed up the headlines, Madam President, about Hillary Clinton's imminent victory. And of course, that didn't happen. Same thing happened with many previous elections. But the point being, the polls are lies, and they are there to manipulate public opinion. And they've always been exposed as being lies. We just don't seem to learn our lesson, at least by the people that rely on the polls or were fretting about the polls. However, Polymarket, the actual prediction market, when money's on the line, when you have to put your money where your mouth is, turned out to be exactly correct. And as a result, apparently they're now being targeted with a 6 a.m. daylight raid. And the reason why they're always at 6 a.m. is that's the earliest you're allowed to serve a search warrant by law, unless you get what's called a nightcap exemption, which allows you to serve a search warrant at night. But most search warrants are daytime search warrants, 6 a.m. to like 10 p.m. But they have to be served after 6 a.m. And so that is why the knock on the door always comes at exactly 6 a.m. unless whatever they're investigating is so egregious that they have to do the search warrant right now before you either kill somebody or destroy the evidence that they're trying to seize. And they were able to convince a judge that you're actively plotting on destroying that evidence. So if they don't get the search warrant right now, you're aware you're going to destroy the evidence and it's going to be lost forever. And they get a nighttime exemption on the search warrant. That was not obviously not the case. And so at 6 o'clock in the morning, the FBI kicks in the doors at Polymarket CEO's house and seizes all his electronics. So the more things change, the more things stay the same. In happier news, I have often spoken about how this cycle is going to be the cycle that vindicates El Salvador. And this is going to be the cycle that vindicates Michael Saylor and MicroStrategy, because this, of course, is their first full cycle. And they just experienced their first halving, and they're on the cusp of experiencing their first parabolic bull run. But along those lines, not only is this going to inspire both corporate and nation state FOMO, because people are watching, people will take notice. People are already taking notice of how well it's going in El Salvador and how much money MicroStrategy is up because of their Bitcoin, their Bitcoin play. But people that will take notice and maybe feel a little bit of jealousy are going to want to emulate what they've done. And that's where the FOMO comes in. And that's where the corporate and nation state FOMO is going to come from and how bad it's going to get. But on a smaller, but still significant note, this is also the cycle that's going to vindicate Russell Okung. Remember Russell Okung? Remember he's now the retired NFL player who took part of his salary in Bitcoin? Well, USA Today ran the headline yesterday. Retired NFL lineman Russell Okung waited 4 years to dunk on his Bitcoin haters. Bleacher Report reported a day ago, Russell Okung's $6.5 million Bitcoin salary in 2020 Panthers contract now worth $20 million. More than double, more than triple. If he had just been paid in US dollars, that would have inflated away. So this is just one more example of how major, significant FOMO is coming. And things are just getting warmed up. When we blast past 100,000, 200,000, 500,000, wherever we ultimately end up for an all-time high this cycle, how many more sports legends do you think it's going to take to soak up all the Bitcoin that's on the market? How many NFL players could purchase $20 million in Bitcoin or have 20 million salary paid in Bitcoin? Well, the answer is quite a few, but only if the price of Bitcoin is radically higher, because there's only ever going to be 21 million Bitcoin, and most of those have already been issued. Very, very few of them are ever on the market. If you want to purchase any of those Bitcoin and there's more competition to purchase those Bitcoin, those laws of supply and demand says that the price is going to go up, and not only up, but radically up. But either way, congratulations to Russell Okung for having conviction in Bitcoin, for having strong hands, for holding it out, for waiting the 4 years, and for now seeing the results of his strong hands. That is really cool. The last thing I want to talk about before we move on to our DCA Wednesday segment is the Bitcoin roller coaster guy still a jinx? It used to be you would have the meme on Reddit or then crypto Twitter of the little animated Bitcoin roller coaster going up every time Bitcoin's going up with his hands in the air, or down when it goes down. You could even buy like a block clock type device that had the roller coaster guy on it, and it had real-time price. And if the price was going up, he was tilted up. And if it was going down, it was tilted down. And then you kind of stopped seeing those. And it got to be the point when anybody ever posted roller coaster guy, especially roller coaster guy going up, people will say, okay, now you killed it. Now you jinxed it. Now the price is going to collapse. And I just haven't seen roller coaster guy. And I was wanting to post roller coaster guy in relation to this bull market, but I haven't because he'd been a jinx. Is that still the case? Do you even know who Bitcoin roller coaster guy is, or is that before your time? Let me know. Shoot me a DM at BTC Bulletin Pod, or send me an email, bitcoinbulletin@protonmail.com, or make a post and tag us in it at BTC Bulletin and BTC Bulletin Pod, and let me know, because I'm genuinely curious and I don't want to be the guy that jinxes it by posting roller coaster guy. But that was a fun meme from previous cycles. All right, now on to what makes today and every Wednesday special, and that is that today is DCA Wednesday. What is DCA Wednesday, you might ask? Well, DCA is short for dollar cost averaging. We spoke a little bit about that when we were talking about the Bitcoin price, but dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 173rd stack. We started stacking our regular interval weekly on Wednesdays, every Wednesday, all the way back on July 28th, 2021. And so far, we've stacked 172 times. We chose our equal portion of just $20 because I wanted to keep it simple. I wanted to do two things. I wanted it to be a low enough amount that most people listening to this podcast should be able to afford $20 a week. If you can't, again, you do you. If $20 is nothing to you, obviously Michael Saylor's not stacking just $20 a week. That's a decision for you to make. But we wanted to keep it simple. I also wanted to show that even if $20 a week is all you can afford, that over time you would build an appreciable stack of Satoshis. And so during those 172 Wednesdays, we converted a total of 3,440 US dollars into a stack of more than 10 million sats. 10,111,331 sats to be precise. More than 50 times the amount of Satoshis the average person will ever be able to acquire if the globe goes on a Bitcoin basis. If the entire world is trying to stack sats and they have to therefore be distributed as equally as possible, the average person could only hope to have maybe 200 to 250,000 Satoshis one day. And we've already stacked more than 10 million, and we did it converting just $20 a week. Today, we're going to add to that stack, and as usual, we're going to do so using the handy dandy Cash App. Cash App is not a sponsor of this show, but I like using Cash App because it's really easy. They let me transfer money to Cash App immediately. They let me use that money to purchase Bitcoin instantly, and then they'll even let me transfer that Bitcoin out to my hardware wallet instantly without making me wait. A lot of other services either don't let you buy the Bitcoin right away or make you hold it in their account before you can transfer it out. Cash App does none of that. Cash App is not a sponsor of the show. I want to emphasize that. I'm just tooting their horn because I like them. They're probably not even available where most of you are listening, since the majority of our listeners are outside of the United States. But if they are, and you're not using Cash App and you want to use Cash App, there is a referral code in the show notes. Again, they are not a sponsor. Every Cash App user gets their own referral code. If you sign up, you'll get a referral code to give your friends and family as well, automatically. But if you do choose to sign up, it would be silly not to use a referral code, because you're going to get something that you wouldn't normally get. And in this case, you'll get $5 free just for signing up. And the podcast will get $5 free as well. So please consider clicking on that link in the show notes using our referral code if you choose to use Cash App. Because we will immediately convert that $5 into Satoshis. Hopefully you will too. And that'll be $5 worth of Bitcoin that you would not have normally had you not used that referral code. All right, so I've got Cash App open. I already have $20 loaded onto Cash App, so it's just a matter of tapping Bitcoin, tapping buy. This time I have to manually enter $20. Sometimes 20 is a choice that you can just tap on, but this time it's not. So entering $20, tapping confirm, and boom, just like that, we've purchased another 21,595 sats. That is more than 4,000 sats fewer than we purchased last DCA Wednesday, and that is the the way it goes with Bitcoin as it goes up. This was now our most expensive stack in the history of the podcast. We stacked it up at a price of $90,530. That is almost $15,000 more than we stacked at last week at $75,731, which was already the highest we'd ever stacked. And that's what happens as the price goes up. And it's one of the things about DCA. We buy the highs, but we also bought the lows, and we bought everything in between. And as a result, our average purchase price now, it's up a little bit. This purchase bumped it up by about $124, but our average cost basis is still a mere $34,146.11. And that is pretty darn good considering that Bitcoin's ringing in above 90,000 US dollars right now. Most importantly, though, it brings our stack up to more than 10,132,000, and it brings it up to exactly 10,132,926 sats, which is really cool. We have more than 0.1 Bitcoin, and we did it at just $20 a week. And now I only get into these numbers because I want to point out the reason. And the reason is not that I'm being a moon boy, but to put into perspective what I was saying earlier about all that really matters is the size of your stack. Because when Bitcoin hits the numbers I'm about to talk about, that is not going to be what won't be as important. The fiat price you paid today will not be as important as the number of sats that you have. But when Bitcoin, for example, hits $100,000, and we're less than $10,000 away from that at this point in time, it could. If we had another day like we had the other day where we had almost a $10,000 run up, it could literally happen tomorrow. It will certainly happen this bull run if it doesn't happen by the end of the year. And when it does, without adding another Satoshi to our stack would have a US dollar value of $10,132.94, which is not too shabby considering we converted only $3,460, just $20 a week. When Bitcoin eventually hits that $1 million mark, if that's your personal moon, that stack would have a value of $101,329.26. Now we're talking life-changing money for a lot of people. I mean, already just $10,000 is more than the average American has in savings. There was just a headline that I forgot to talk about on this podcast that said more than 50% of America has zero savings. It used to be more than half of America couldn't even afford a $500 emergency, but now they can't have any savings at all. They've been forced to go into debt just to buy groceries and survive with inflation as high as it was. So certainly $10,000 is more than the average American has in savings, but $101,000 would be flat out life-changing to many people, to I would dare say most people in the world. And then, of course, Fidelity's Jurrien Timmer's the one that said he believes Bitcoin will hit $1 billion one day. And if it does, this stack would be worth $101 million. $101,329,260. Life-changing money for anybody that's listening to this podcast. And again, the reason I'm bringing that up is not because I'm trying to say you're going to get rich one day, but I'm trying to say if Bitcoin is at the point where our stack is worth $101 million, are you really going to care if you bought at 90,000 or if you bought at 50,000 or if you don't buy until Bitcoin's 150,000? The point being, all you're going to care about is how many Satoshis you have. And that is why we continue to DCA weekly. Before I go, again, I want to ask those of you listening to the podcast to support us through feeding that algorithm monster by making sure you're following us on Twitter. Again, we're at BTC Bulletin Pod on Twitter. By making sure you're subscribed to the podcast, that you've got automatic downloads enabled if you're listening on Apple Podcast, and that please, if you would rate and review this podcast, that helps boost the podcast and the podcast rankings tremendously. Most importantly, though, I just like to hear from you, and you don't have to send us a boost. You can send me a DM at BTC Bulletin Pod on Twitter or X. I have X open right now. Again, it's at BTC Bulletin Pod, BTC like Bitcoin, Bulletin Pod as in podcast. And I read my DMs and I respond, unless you're that cute Asian girl asking me how my trading is going. If you're not on X, we're also on Nostr. And if you're old fashioned, like a lot of us, you can send me a good old fashioned email. And my email is bitcoinbulletin@protonmail.com. I have a tab with my Proton Mail open as well. So I'm looking at it right now. I respond to every email I get. Again, that's Bitcoin Bulletin at protonmail.com. Again, disclaimer, I don't respond to the scams, to the commercials, to the ads, to the junk mail, but I respond to every pleb that contacts us, that reaches out to me via email. Most importantly, though, don't forget to follow us next Wednesday and every Wednesday when we grow this stack of Satoshis, just $20 at a time, as long as there are people out there foolish enough to trade their precious Bitcoin for worthless fiat paper. Either way, though, keep on stacking those sats, you sexy sat stackers.